Hey, it's Greg. Welcome to the channel. Well, I wanted to get this update out quickly in real time. There's so much going on in the market today. I wanted to get this out quickly, discuss what's been happening, and give some of my views as well as my ideas on, and suggestions as to what you should do vis-a-vis your portfolio. Okay. So today was a crazy day, followed by yesterday, which was also a crazy day. Both PPI and CPI came out, giving investors and the world a better view as to what's going on with inflation. PPI came in annualized at 8.5%. That's down from 8.7 from August, but still a kind of a shocking number. But in my mind, what was even more interesting and even more shocking was the CPI data. Okay, CPI came out today at 8.2% on an annualized basis. That was higher than what was expected at 8.1%. I don't know how these expectations are arrived at, but that was the consensus expectation. So it came out hotter than was expected. And of course, that was down slightly from August, which was 8.3%. But in my mind, the real shocker, and I think the thing that got people's attention more than anything else, was the annual rise in the core rate, which was 6.6%, which was up materially from 6.3% in August. This is a shocking number because it takes out the volatile food and fuel numbers for people that don't drive or heat their home or eat. All of those people are concerned about this core number. But anyway, the core number being 6.6% is something that the Fed really focuses on, and it just shows a stubbornly persistent inflation situation, and it shows that we are, more importantly, very far away from dealing with this inflation, from the Fed taming this inflation. And it basically says that the Fed has got a very long way to go before it brings down inflation to its 2% target or anywhere near its 2% target. Of course, the market, in its usual fashion of doing things that, in the short term anyway, that make absolutely no sense. Initially, the market sold off 400 or 500 points, but as the day wore on, and the day's not over yet, I'm making this video prior to the close, but as the day wears on, that reversed, and now you're seeing this huge rally. Okay, now, who knows why the market is doing this? You can never figure out necessarily the motivations for short-term movements. I think it's simply a bear market rally. The market was going into this very oversold. Who knows, maybe people were expecting even worse, and so it's kind of a relief rally. Who knows? Who cares? It's short-term. It doesn't mean anything. I'm checking it right now. Right now, the Dow's up 907. The Nasdaq's up 238. Wow, which is 2.3%, and the S&P is up 98 points, 2.76%. Pretty big rally. I mean, there might be 1,000 points in the Dow, before the day's over. But again, in my mind, this means nothing at all. The overall direction of the market, in my mind, is still down. Thought one of the interesting things that I heard, Larry Summers again, who has been one of the outspoken economists on inflation. He's been basically right all along when everyone else was saying, including the Fed, was saying that inflation was transitory for about a year. He was saying no, he disagreed with that, and so people have been paying attention to a lot of what he has said. He is saying that, basically agreeing with what I think, that the Fed is very, very far from taming inflation. And he even expressed the view that inflation will not be tamed or will not come down until the short-term rates, or the target rate that the Fed is setting, is in excess of inflation. Okay, that's a pretty bold statement. A lot of people probably disagree with that, because if that is true, and if you accept that as an assumption, we could be a year, year and a half, 2 years away, and this misery that we're experiencing in the market, will just continue and continue. And I think that anyone who's looked at their 401k recently, or their general stock portfolio, or even mutual fund portfolio, if that's what you're into, what's happened in the last 6 months has been rather shocking. Now, having said that, I've expressed these opinions quite consistently on the channel for a long period of time. You can go back and look at some of my market commentary going back 6-8 months. There has been an incredible sell-off in the markets since the Fed started tightening, which really was only in March. Okay, so it hasn't been that long. There has been a dramatic decline. The NASDAQ is down over 30%. Everything's down, okay? No matter what you owned, unless you were in energy, like I have been, and like we've recommended on this channel, unless you were in energy, you just got slaughtered, no matter what you were in. But I will say that when you're thinking about, where is a bottom, and are we getting close to a bottom? You hear the people endlessly talking about this on the business news channels. My personal opinion about it is that while this sell-off has been very dramatic over time, by historical standards, it has been relatively orderly, in the sense that it's gone down. It's kind of like a slow death. It's gone down, down, and down, and down. But there hasn't been like this incredible blow-off selling, panic selling that you typically see at market bottoms. And because of where we are, I think, in the interest rate cycle, the Fed's cycle of lowering liquidity and reducing interest rates, because of where we are in the cycle, I don't think we're anywhere close to a market bottom yet. Okay, corporate profits are just starting to come down, and they will continue to come down. I think that if you look at the things that I rely on, which is basically the VIX hasn't gotten any higher than like 32. I mean, that's not very high. If you go back in time, and I'll do more content on this where I actually look at the charts and stuff, but on this video, I'm just going through it in summary form. You go back and look, when there have been panic selling, the VIX is at like 50. At the height of the COVID sell-off, it traded as high as 85. Okay, and that basically coincided with the bottom of the market. I mean, almost exactly, almost to the day. So you got to look at the VIX. You got to keep your eye on that. In my mind, we have not had panic selling, and there's still, even though you hear on TV, oh, everyone's bearish, everyone's bearish, everyone's bearish, I still hear tons of people every day spewing out bullish cases. So in my mind, there's still too much bullishness, there's still too much hope. You're not going to see a market bottom until all that hope and bullishness is completely washed out and everyone is bearish, and you see, some period of panic selling. Okay. The Fed, if they keep going on with what they're doing, and I think they will, they're going to break something. Okay. So I want you to be prepared as a market participant. I want you to be prepared that it could go from bad to worse, and not only worse, but much, much worse. Okay, when some unintended thing happens, and you saw a glimpse of it with Great Britain and the gilt, and apparently the pension funds are holding derivative products that are blowing up, and there was panic selling. Something like that's going to happen. The UK thing probably isn't big enough to cause contagion, but something like that is going to happen, guys. Either with the strength of the dollar, with the interest rates going up, something's going to break. And so that brings me back around to the last thing I wanted to talk about, which is really what is my opinion as to what you should be doing with your portfolio, and basically what I am doing with my portfolio and what I have been doing. You want to use these bear market rallies to raise cash. Okay, I've been saying that for a long time. I still believe that. Sell your losers, raise cash. Okay, cash right now is your friend. Okay, don't worry about what you're earning on it. Okay, be much more concerned about what you could potentially lose being in the wrong names. My approach right now to portfolio management is extremely simple. Okay, in fact, it's far too simple for any of you out there to actually do it, because I've talked to a lot of people, I've talked to a lot of subscribers. People cannot do this because it's too simple. I have been doing it, and this year alone, I'm up over 60%, okay? I'm not bragging, okay? A lot of it was luck, okay? I admit, never underestimate the role of luck in success, okay? But I am bona fide over 60% up, probably more today with this rally. And my approach was very simple. Number one, I only have like 3 positions, and I have a 4th and a 5th position, but they're so small that they didn't matter. I have an enormous allocation to energy, mostly ExxonMobil, which I started buying back in 2020 when it was selling for 35. That position alone is up over 60% this year. Secondarily, I own Google, Alphabet, okay? I did a video a while back, which I will put in the description below. You can take a look at. I bought some Google pre-split before it did a 20-for-1 stock split. And actually, for fun, I'll put it up here at the end, okay, so you can take a look at it. So I own some Google. The vast majority is in energy with Exxon. And then, as a hedging / trading vehicle, I have been using the 𝐥𝐿𝐞, which is the triple leverage short 𝐿𝐞. So I'm basically, by being long that, I'm triple leverage shorting the 𝐿𝐞, which is the NASDAQ, okay? Now, I've done some content on this. I'm going to be doing some more content on it, so stay tuned to the channel. I'll explain more how I've been doing this. But this 𝐥𝐿𝐞 from the beginning of the year is up like 123%, right? Because it's benefited from the market going down. So there have literally been days and weeks when the market sells off tremendously. And because I'm in energy and this 𝐥𝐿𝐞, I'm up. You know, it's ridiculous. You know, the market goes down 3%, I'm up 4%, you know. So I'm not claiming to be like some genius. A lot of this was luck. A lot of success is luck, but I try to do the work. I try to give you guys some of my best suggestions, and you can either follow them or not follow them. Some of my subscribers have, which I talk to quite a bit, and they're extremely happy. And they made the same comment on a daily basis. Sometimes the market goes down dramatically, and I'm up. It's like incredible. But so that's it. Now the other thing, the only things I would be in here are energy, and as a hedging mechanism, the 𝐥𝐿𝐞 to protect me on the way down, and to hedge. And you can trade around that, around the you know, within the trading range. You can trade it if you want. But recently I've just been keeping it on. And the other thing that I think is a good bet, and the 𝐥𝐿𝐞 also hedges this, is the ultra high quality tech shares, okay? And really the only thing that I have a significant position in right now is Alphabet, okay? I think 3 years from now, I have a relatively low basis. 3 years from now, I didn't buy at the absolute bottom, but close to it. 3 years from now, I'm going to be very happy I own Google, Alphabet, okay? So I would only be in the ultra high quality mega tech names, okay? I think virtually everything else is vulnerable. Some would say, oh, Greg, that's such a simplistic way of looking at it. Yeah, it's simple. It's so simple that most people can't do it. Most people won't do it because they think they have to be in 20 names. You don't have to be in 20 names, and you'll never beat the market if you're in 20 names, okay? I've expressed that many times on many videos. So I don't want this to go too long, but listen, check out this video, which would be the one on Google, and then also this one here, which will be a playlist that I think you'll find interesting if you're new to the channel. And with that, I appreciate you watching. Thank you very much. If you got value out of this, please like and subscribe. I'd love to have you on board for future videos. And thanks for watching again, and I'll see you on the next video.